everyone, I'm Queenie.
Hello, I'm Nicolette, and today we will be doing a review on the recent launch that happened, Vela Bay.
By now, if you don't already know, Vela Bay launched on the 25th of April and it sold 72% on the launch day at an average of 2886 PSF. Definitely sounds like a very decent performance, right? But of course, is 72% sold representative of how good or bad the performance has been? Does it really give us a full picture of how good or bad this is going to be, right? And we also get many questions. On the same day, Tengah Gardens actually launched also, and the take-up rate was actually 99%. So 72% in comparison definitely feels a bit underwhelming. We cannot just look at the absolute numbers in terms of take-up rate. We have to zoom into exactly which stacks sold, okay, which stacks did not, and more importantly, why. So for Vela Bay, here's the elevation chart on the launch day, okay, and what you see is stack 1, 5, 10 and 15, okay, 1, 5, 10 and 15. These are the stacks that have actually quite a number of remaining units left. And fun fact, stack 1 on the launch day, it was almost untouched until the very end.
What's actually happening here, let's just break it down a little bit. So stack 1 is right over here, and it was priced starting from about 2.794 million. Okay, sounds reasonable, right? But when buyers walked in and saw the unit, they realized it was directly facing Costa del Sol. Plus, it has West Sun. So that's a deal breaker because people are paying millions of dollars for a nice view here, or even for a development with a freehold status in the East Coast. But in time to come, will the remaining units here shift? Most definitely. If your budget is about 3 million, you're missing the entry of about 3 to 500k to be able to stay in a freehold 3-bedroom near the Marine Parade Central. And the next newest option would be Seaside Residences, and you don't have actually many units to choose from at this point of time. You're looking for something that is brand new, a 3-bedroom, and it's near a doorstep of the MRT. I would say the next best option is actually Vela Bay.
For stack 5, 10 and 15, okay, if I'm to navigate on the side map here, okay, 5 is actually our 5-bedder, and stack 10 and 15, they are the premium 4-bedder. Okay, so these are larger floor plates, which means higher quantum in terms of entry. Naturally, our buyer pool will be smaller for sure. Right, so we are talking about 4.5 mil price tag, okay, for entry in the 5-bedder over here. And for our 4-bedroom premium, tag 10 over here, also touching the 4 mil mark, okay, 3.8 million. Okay, imagine today you have a 4 million budget. You have many other options in the D15, D16 area. We are actually showing you the recent transactions in both the condo and landed segment. You can get a brand new development as well in the likes of Mayor Blue Continuum, freehold developments in a more city fringe location. Landed sector, of course, okay, you can go for inter-terrace, and of course there are options in the semi-lease segment as well. In a nutshell, okay, all these bigger floor plates of higher quantum, at launch it will move slower, but in time to come, okay, especially closer to TOP, whereby own stay families, they can move in ASAP. That is where we'll see the units move.
What is really most interesting is that the 5-bedders in Vela Bay was actually priced the highest PSF in the entire development, starting from about 2,829 PSF and as high as 3,217 PSF. And psychologically, most buyers cannot actually fathom this because back then, not long ago, 2,000 PSF actually felt like a ceiling. But buyers are starting to be conditioned to accept prices that are close to 3,000 PSF. But here's what most people don't see behind the scenes. It's more about the developer pricing for the 5-bedders at 1,582 square feet. Okay, if they were to launch it at 2,600 per square foot, that would actually translate to 4.11 million. And if they price it at 2,700 per square foot, that would be priced at 4.27 million. And at $2,800 per square foot, that would translate to 4.42 million. So if they were to price it too low, naturally the units will move very quickly, because in today's market, if you're looking for something that is new, something that has a large floor plate, actually $4 million has already been accepted, especially in districts like District 15 and 16 with the equivalent or similar lifestyle as what Vela Bay is offering. Buyers might see this as actually a value buy instead.
As of now, okay, we have only been discussing what has happened during the launch, right? So more importantly, we want to know in time to come in the resale market, how will the performance of Vela Bay be like? Because at launch, what we are seeing is only pricing, take-up rates, stack performance. That's only half the equation. As a homeowner today, or more importantly, investor, okay, the more important question is what happens at the exit? Who are you selling to? And the most important question today, will your future buyer be willing to accept the price?
Now let's talk about something that most buyers overlook. Basically the difference between a new launch pricing as well as the resale. Okay, so in the new launch market, there's really only one player, and that is the developer. Whether the market is good, whether the market is bad, whether the cost is high, the cost is low, they are actually the ones who decide how the project is positioned and what is it going to be priced for. But once the project actually hits the resale market, then there will be multiple variables like, example, how many units are available at a point of time, how many sellers are you competing with, and how urgent is each seller at any given point of time. So this price, I would say, is no longer controlled. Instead, it is more negotiated. We cannot predict what Vela Bay's performance is in the resale market per se, but there are definitely interesting statistics that we can actually reference from, like Seaside Residences, the most comparable development to reference from.
The first common question we get from buyers is, okay, does buying a high floor means I'll earn more? So like over here, we're looking at level 12 versus level 2. In absolute sense, perhaps so, right, as we can see over here. But let's not forget that your upfront costs will be higher as well. So in this case, okay, we see that the returns on an annualized gain are actually comparable. In a nutshell, paying more for a higher level doesn't always mean that you outperform on a percentage basis.
Second is, of course, the holding period. A lot of people think that if I hold longer, I will probably make more. It is not always true, because beyond a certain point, your return actually starts to plateau. And this is actually a very good example, because one-bedder buyers are typically investors. The point of investment is, of course, the highest yield within the shortest period of time. So what really matters is how much you put in, number one, versus how much you take out, and how fast you can actually achieve that. That's why we always look at annualized returns and not just absolute profit. So if we take a look at this case study, this is at Seaside Residence, notice that these two transactions that has been highlighted, both buyers actually bought in at the same time, but their point of exit was very different. So one exited at the 4th-year mark and another exited at the 8th-year mark. Okay, the thing is, even though you exited a bit later, yes, you might have made 20k more, but what will you have lost out in terms of these 4 years of opportunity cost? And we focus on what is the annualized. Actually, it has dropped to 1.96% from 3.62%.
On the other hand, of course, we also want to deep dive a bit into another bedroom type. So in this case, we are looking at the 3-bedder performance in Seaside. Did holding longer mean that owners will earn more? Okay, so here are very interesting statistics that we're looking at. So in this case, okay, before we look at the numbers, we know that 3-bedders with bigger floor plates, they are definitely bought for own stay. And in this case, they have actually seen a much stronger gains in absolute profits over the past few years, because buyer pool, they are families, lifestyle buyers, so they are definitely less price sensitive, more emotional driven when they are negotiating for your unit. Right, and here is the final layer. In the specific context of East Coast, okay, today if you are buying for views, buying for privacy, for premium stacks like this, okay, sea-facing units, buyers knows that they are entering at the highest price, but they are paying for views, paying for exclusivity, paying for lifestyle. In this specific example, level 2 versus level 21 transacted just about 3 months apart. You'll see that these high floor unit buyer was willing to pay 600k more than what has been done at second floor just 3 months ago. So when you're buying in a project like Vela Bay, don't just think about how easy it is to enter, but also think of who you are selling to in the future.
So if you have watched our video up to now, do help us like, share and subscribe for more property insights. So now that we have broken down the entry and more importantly the exit, the real question becomes, should you actually buy into Vela Bay today? And this comes down to two key concerns versus two very strong reasons why buyers are still entering.
Concern number one, okay, many of our buyers have been asking us, will the sea view actually stay? Because if you are paying a premium for the sea view, the question next will be, how permanent will this be? Right, this is where the Long Island project comes in. In simple terms, it's actually a long-term coastal protection plan designed to tackle the rising sea level. And this will be done so by reclaiming the land along the East Coast stretch. Timeline-wise, okay, this is a multi-decade project, not something that will be happening overnight. In the long run, what to expect, right, as somebody who bought Vela Bay today? Most definitely, the coastline will be reshaped, which means today's sea view may not actually look the same, right, in time to come. The question isn't if, right, it's more of when and how much it matters to you.
So the second concern a lot of buyers have is that is entering at $2,800 per square foot too high? Okay, so in absolute terms, I would also agree that it's definitely high. But in context, if you look at Vela Bay against other projects that were launched along the Thompson East Coast line, you'll notice something interesting. So we're starting off all the way at Woodlands South, your Norwood Grand transacted at 2,070 per square foot, moving to Springleaf transacted at 2,187 per square foot, and then closer we have Lentor Central, which has already been fully sold, launching at 2,265 per square foot. So essentially all these have already set a new pricing and benchmark in land. And if we look at something that have recently launched in, I would say, the past 1 year, closer to the city and the city fringe, we have Promenade Peak, Zion Grand, River Green and River Modern, and all these have already transacted between 2,009 to 3,002 per square foot. So 2,008 is not cheap. But if we take a look at this against the other launches along the Thompson East Coast line, it's actually not out of line of today's market direction.
So despite the concerns, quote unquote, that we have just discussed, right, one thing for sure is it was still 72% sold on launch day. And why is this so? Number one definitely will be the scarcity of developments, right, at the doorstep of MRT, especially in the east. By now, most of the buyers we have served have one non-negotiable. They must stay near to where they can walk to the MRT station. And if you are an Eastie, if you miss out Grand Diamond 3 years ago, okay, your next option is actually Vela Bay at the doorstep of Bayshore MRT. And if you miss this, your next option could very well be the Bedok Rise plot at Tanah Merah MRT. Based on the land price, this is very likely gonna launch on par with Bayshore price. So the question back at you is, at the same price point, would you rather stay at Bayshore or Tanah Merah?
And of course, the next thing that we talk about is how rare is it in Singapore to find a development with a sea view. I think that's where the rarity stands out for Vela Bay. And if you specifically want a new development with sea views along the East Coast, your last probably similar option would be Seaside Residences. So today, Seaside Residences is already about a decade old. And today, basically buyers, when they go view Seaside, when they view Vela, what they actually think about is, do I want to be paying a premium for an older project? Or do I want to enter something that is brand new like Vela Bay, for example, for its newness, for its fresh lease, and also for a layout that's more efficient? To wrap things up, basically, if you have missed out Vela Bay or are looking to enter any of the upcoming launches in 2026 and want to basically understand, what is a safe entry point, which unit types makes more sense, and how do you position yourself in a way that you will be strong in exiting in the future. So feel free to reach out to myself or Queenie, and we will be happy to run you through the entire numbers so that you can make a more well-informed decision. If you have enjoyed this breakdown and review of Vela Bay, do help us like, share and subscribe to more property insights. Bye!